If you currently have more than $5,000 sitting inside a traditional checking or savings account in America right now, you are losing money every single hour. And tomorrow, the situation is about to get much worse. Wall Street is screaming panic. Headline inflation is projected to accelerate sharply toward 4.2%. The massive oil shock, triggered by the conflict in the Middle East, has sent national average gas prices soaring past $4.50 a gallon, creating a brutal, invisible tax on your daily life. Most people think keeping their money safe in a big corporate bank like Chase, Bank of America, or Wells Fargo protects them. It doesn't. In fact, it's a trap. While the cost of survival is climbing at over 4% a year, these multi-billion-dollar institutions are paying you a humiliating 0.01% interest. Your purchasing power is being completely erased. In this video, we are breaking down the exact macroeconomic trap the Federal Reserve has set for June 2026. To understand how we got here, we have to look at the massive illusion that happened last Friday. The U.S. Bureau of Labor Statistics released a blowout jobs report showing that America miraculously added 172,000 non-farm payroll jobs in May. On paper, it looks like a booming economy. But the reality under the hood is terrifying. The labor market is resilient, yes, but it is fueling the fire of core inflation, which is sticking stubbornly near 2.8%. For months, the entire country was holding its breath, hoping the central bank would finally cut interest rates this summer to make mortgages, car loans, and credit card debts affordable again. But after this massive jobs data and the upcoming CPI report, those rate cuts have been completely put on ice. The futures market is now pricing in virtually a 0% chance of a rate cut at the upcoming FOMC meeting. In fact, for the first time since 2023, whispers of an actual interest rate hike are starting to creep back into Wall Street forecasts. What does this mean for you? It means the current federal funds rate target of 3.5% to 3.75% is locked in for So, where do you put your money when tech stocks are volatile and traditional banks are robbing you blind? You do exactly what smart institutional capital is doing right now. You look for the safe havens. Let's look at the math. If you keep $10,000 in a traditional bank account, at 0.01%, you earn a pathetic $1 in interest after an entire year. Meanwhile, inflation destroys over $400 of your real-world wealth. But if you pivot that exact same $10,000 into a top-tier high-yield savings account, or HYSA, paying between 4.5%